Good morning friends and welcome to the pre-market view. We had weakness across the markets yesterday as well, and so this is the second day in a row that the US markets were down about 0.75 to 1.5%, and even the European markets were down anywhere from about 0.5 to 1.5%. Now the key question is what is leading to this fall across the markets. First of all, in the US we have this great talk about fiscal cliff. Just to put simply, the entire revival process which is underway by doing QE3 bond buying programs and the lower interest rate regime could come under threat if over the next 2 months the government is not able to do any kind of a settlement with the Congress and the Senate to put in place a proper mechanism to sustain this entire process. The government will have to actually increase the tax rates, cut the spending, and do a lot of harsh things over the next couple of months, and that actually could derail this entire moderate growth that the US economy is registering at this point of time. And in case the taxes are raised, particularly the capital gains tax, then it could be sentimentally negative for the stock markets, and in anticipation of that we are seeing some selling by the investors in the equity market. Same is the scenario with the European Union, and the Greece part is not getting resolved. The final bill which was supposed to be passed about austerity has not happened, and also we had statement from Mario Draghi that there is a spillover effect of this Eurozone crisis to the countries which were relatively doing much better like Germany, France and couple of others. So this entire turmoil has got aggravated because of the fiscal cliff related issues. Talking about the Asian markets today morning, they are relatively better off, but overall they are also down about 0.25 to 0.5%. In terms of flows, friends, yesterday also we had a net buying by the FIs in the cash market to the tune of about 248 odd crore, and even the domestic institutions were buyers to the tune of about 85 odd crore. Our markets has been quite resilient for the past 2 days. The flows have been positive, and we are seeing that there is some improvement in the breadth and participation by some of the mid-cap companies, particularly the high beta ones, which is comforting. But it's very important to see what really happens to the global markets, because remember, both Dow and the S&P have closed below their important 200 days moving average. So if the global markets are not supportive, then this entire sentiment and the flows part could actually come under threat. So this is something that we will be watching out for. On that note, let me invite Nandesh to take us through important F&O cues, ideas and strategies that we could look at in the F&O markets.
Good morning friends. A day before yesterday we have seen that overall global markets has seen some aggressive selling pressure coming in. Dow Jones were down around 2% yesterday. Hang Seng was also down by around 2%, but India has really outperformed its global peers, and we were down only marginal by around 0.3%. On the position wise, we have seen that profit booking has been taking place in yesterday's trade, and now around 6.6 lakh shares were reduced in open interest with a significant decrease in the cost of carry. Is clearly indicating that profit takeaway were there at on every rise in the yesterday's trade. Friends, interestingly, another thing what we have seen that whenever Nifty futures touch around Nifty future premium touch high around 38-40 points, selling is coming in the market. Now overall historically also we have seen that in the past 6 months, whenever the Nifty premium goes around 38-42 points, that is a level generally where we have seen the selling is coming in. So yes, for a timing, what we think that overall market will consolidate in a range, because we haven't seen any positions building up on either side. On the position wise, as profit takeaway is taking place on the higher side. On the option side, activity was pretty good in 5,700 strike. We have seen a very good addition taking place on the call side, and marginal addition is taking place on the put side. Now PCR ratio remains intact. Earlier it was around 1.11, and still in yesterday's trade also it was around 1.11. On the IV front, again the implied volatility has cooled off marginally. India VIX has also cooled off around 2%, and now hovering around 14% band, which is around 6 months low, somewhat near around 6 months low. Again, that thing is pointing that market will consolidate in a range for a time being, as even we have the festival season is going on, and we have less number of trading mix in the next week. So we might see them consolidation taking place from the current levels. On the overall basis side, bias side, we have seen that 5,700 being the VWAP level, so those levels will act as a very good support for a short term. Friends, what we are expecting that we might retrace up to 5740, 5720 levels from the current current levels, but overall bias for the market remains positive, and 5,700 will act as a very good support for the medium intermediate term. Now from what we are recommending at the current levels is IV is pretty low, so what we are recommending to form a straddle at the current levels, straddle 5,700 call and 5,700 put for the November series. One can average it out at the buying at 145 and then again at around 130, 120 levels. Now 100 can be placed as a stop loss for the November series. For intraday, we have identified 3 stocks. Dabur is looking positive and stop loss can be placed around 127.55. Sterlite is looking positive and stop loss can be placed around 101.90, and JP Power is looking negative and stop loss can be paid for 38.55. That's all from all of us, friends. Thank you.
Friends, these days everyone is talking about the term fiscal cliff. So for our viewers, let me just try and give a simplistic explanation of what this term is and what would it mean for the markets. Friends, fiscal cliff is basically a term to describe certain important legislations which are there in US which would have effect till December 2012, post which the Obama administration and the Congress will have to come to an agreement about what could be done about this entire fiscal deficit part. In case they are not able to arrive at this agreement, then the government will not have any choice but to actually increase the tax rates, cut the spending, and take few harsh decisions. Now what would that mean? That means that A, the sentiment towards equity market could get worsened. B, the credit rating of US could come under threat, because we already remember that there was one downgrade by the credit rating agency, and if they are not able to come to an agreement, there is definitely a risk of further downgrade in the US economy. Also in terms of flows, if the easy money and the low interest rate regime is not going to sustain, then the flows into the emerging markets, including equity and other asset classes, could come under threat. So this is the thing which is leading to some kind of a turmoil in the US markets, and which could have implications for Eurozone and for the emerging markets as well. Talking about the companies which are going to be announcing numbers, the key ones are State Bank of India. We are looking at a net profit of about 3,551 crore. The buzz in the market is that the NPLs could be a little better quarter on quarter, and the operational performance could be a little better than what the street is expecting. So there should be a little bit of positive bias towards SBI in today's market. Also Tata Steel, we are looking at a net profit of about 297 crore. And in case of Coal India, we are looking at a net profit of about 3,268 crore. In another development for telecom sector, the one-time spectrum fee related issue has been resolved, and the existing telecom companies will have to pay a one-time spectrum fee of somewhere close to about 30,000 crore to the government. Now what does it mean for the sector? The incumbent operators will give up a part of the spectrum to the new operators, which will lessen the burden for those existing companies. Also, some of these existing companies could raise money overseas to pay the one-time fee, and also it brings an end the uncertainty which has been around in the sector for a long time. So overall, we think that this is a bit of a relief for the telecom companies like Bharti, Idea, Vodafone, and even Arcom. In terms of the companies which have already announced the numbers, Aditya Birla Neo reported extremely good growth in its net profit, which was at about 42% to about 304 crore, and the revenue growth was about 12%. But in case of ONGC, the numbers were not up to the mark, mainly because of the higher subsidy burden, which was up almost 115% because of the higher discounting that the company had to give to the oil marketing companies. So ONGC numbers were not too impressive. And another important development is that the finally deal between United Spirits Group and Diageo may be signed today. And what does it mean for the United Spirits and UB Holding? Friends, the reports are that the deal could happen somewhere in the range of about 1,500 rupees. What is more important is that once there is a change of management, there is going to be a re-rating of the company, because The Diageo is a MNC company, much better quality management compared to the current management of United Spirits. So there is definitely going to be some kind of a re-rating of the stock, and it remains to be seen at what price the final open offer comes if the deal price is about 1500. So expect loads of action in United Spirits today, also in the UB holding, which has seen a good amount of action for the past few sessions. Tata Power has acquired 26% stake in an Indonesian mining company. So one can go long on Tata Power with a stop loss of 100 and target of about 105 to 107. Syntex is looking at raising some funds through QIP route, and the amount is about 140 to 225 crore. So one can long Syntex with a stop loss of 65.75 and a target of about 69 to 70. Pantaloon Retails, we had already mentioned that the stake that Pantaloon Retail has in Future Generali, they are looking at selling that stake. They've already appointed an investment banker for that. And other important development which could come through over the weekend is that they are looking at creating an SPV structure through which they will be selling some of the assets like Central and few others. So in case this announcement comes by, then you could expect good positive upside in Pantaloon Retail. So one can go long there with a stop loss of 203 and a target of about 213 to 217. Sun Pharma has acquired a dermatology company in US for about 1250 crore. Overall results of Sun Pharma were also good, excepting that one-time write-off because of the patent litigation. So one can go long Sun Pharma with a stop loss of 682 and a target of about 718 to 730. In case of Indian Hotels, Orient Express has rejected the offer for taking over that company. Also, indications are that the hotel tariff could be revised upwards over the next couple of months. So both these news are positive for Indian Hotels. So one can go long on Indian Hotel with a stop loss of 62.25 and a target of about 65 to 66.5. And Reliance Communications reported its numbers. Numbers were not good, and as against the expectations of 156 crore, the actual net profit was somewhere around 102 crore. So one can short RCom with a stop loss of 59.75 and a target of about 56.75 to 55.5. That's it from all of us, friends. Have a great weekend and see you on Monday morning.